Do you really want to know why I'm a dividend investor? Well, before I answer that question, leave your like and subscribe to watch more videos. This video is a continuation from the last video where I showed you my $20,000 plus dividend stock portfolio. If you haven't watched it, I'll leave a link in the description for you below. Make sure you go check it out. Today, you will learn all the basic information you need to know about dividends and how they are a great source of passive income. And with all that being said, what's up YouTube? Glad to have you back in the economic lifestyle. Alright my friends, let's get started. So to understand dividends, I want you to imagine a company like this one. We'll call it the economic company. Let's say you like everything about this company. You like its balance sheet, its growth over the last 5 years, the fundamentals are overall good. So now you choose to buy some shares from the economic company. And once you buy shares, you eventually become a shareholder of that particular company. So now, congratulations, you're all shareholders. Now when a company makes profits, it has two options. The first option is to reinvest those profits back into itself so they can continue to come out with new products or new technologies or be able to get more stuff to increase their business. Now moving on to option number 2, they choose to use a portion of those profits to pay back to their shareholders, like you, in a form of stocks or cash. But for the majority of the time, it's in form of cash. And this payment to their shareholders is what we call, you guessed it, dividends. Which ultimately brings us to the definition of a dividend. A dividend is when a company distributes a portion of its profits to its shareholders in a form of cash or stocks. But like I said, the majority of the time it's paid in cash. This cash that they give you is directly deposited to your brokerage account, and you can choose to use it to buy more shares of the company or buy shares of other companies that also pay dividends, or you can just withdraw it to pay your bills. The main point is you're pretty much getting free cash from this company, and all you had to do was be a shareholder. Nothing more, nothing less. Just be a shareholder and hold some shares. Now tell me, is this the easiest passive income you can get in your life, or what? I know it sounds too good to be true, getting paid to pretty much sleep, eat, drink, and hold some shares of a company, but yeah, it's pretty much true. It's that easy. Passive income right there. Now the question you might have is, why do these companies pay dividends? That's a great question, by the way. And here's your answer. I want you to think of it as a way these companies are saying thank you to their shareholders. They're just saying thank you for holding their shares. And while doing that, they also hope you buy more shares in the future, because the more shares you have, the more dividends you get. At the end of the day, happy shareholders increases the chances of more shares being purchased of that company. And also, if you're a happy shareholder, it means you're likely not going to ever sell that company's shares. At least they hope. So it's a good shareholder retention plan for these companies. It also makes the company look a lot more attractive. Investors like me are always looking for good dividend paying companies because we want that easy passive income. So if a good company pays dividends, dividend chasing investors are likely to buy shares from that company, like me. Moving on, there's a few basic information about dividends you should know. And the first one is, not all companies pay dividends. The ones that do are mainly well-established companies who have been around for decades and are very stable. For example, Coca-Cola, Johnson & Johnson, McDonald's, just to name a few. Some more basic information you should know is that these dividends are either paid monthly or in most cases quarterly. Quarterly means 4 times a year, or an easier way to put it is every 3 months. I want you to also understand that every dividend paying company has a different amount of cash they're willing to pay their shareholders. Pretty much every company pays a different amount of dividends, and it depends on the company's dividend yield, which we'll go over more in depth in another video, I promise. But just know, a dividend yield is how much a company will pay in dividends relative to its share price. In addition to that, the amount of dividends you are paid also depends on a per share basis. Look at this example for instance. Let's use the economic company again. And let's say this company pays the dividends quarterly. So that's 4 times in a year, or rather every 3 months. And the quarterly dividend is, we'll say, 50 cents per share. Now you being a shareholder, let's say you bought 20 shares. Since you have 20 shares, that equals $10 the first quarter, or rather the first 3 months. And then we do our calculation for the year, which comes out to $40 of dividends paid to you for doing nothing but holding shares of this company. I know $40 per year doesn't sound like much, but here's the catch. On average, dividend paying companies are always increasing their dividends every year. And the chances are you're a smart investor, so you will always reinvest those dividends and buy more dividend stocks. Now look at this. Now moving on to year 2, let's say dividends increase for economic company to 75 cents per share. And you're a smart investor, so you reinvested your dividends from the previous year, as well as you add some cash to buy more shares. So now look at your year 2 results. And we'll say the second year you now have 45 shares of the economic company, which after calculations brings our year 2 results to $135 in dividends paid year 2. But my friends, please keep in mind, I'm just referring to you holding one dividend stock. Realistically, you would have multiple good dividend paying companies, and some will even pay higher dividends than the economic company in this example. Now I want you to imagine just all the easy passive income you could get as long as you keep reinvesting those dividends into more dividend stock. Exactly, the amount is limitless. Now I want you to understand, I'm not trying to make you use this investing style. Of course, do your own research and find what investing strategy works for you. For my risk tolerance, dividend investing works for me. But keep in mind, I do purchase some growth stocks as well if I find them severely undervalued. But for the most part, my portfolio is filled with dividend stocks. In this video, we learned just the simple basics of why I love dividend stocks. However, stay tuned for the next video where I go more in depth about why I love dividend investing, as well as future videos where I explain multiple terms that you need to know before you become a dividend investor, if you choose to go that route, of course. If you found this video helpful, please don't forget to like and share. Comment what you think, subscribe, and hit that notification bell button for me. And we'll see you in the next video. Cheers!